welcome. You're watching Business Today TV. I'm Sakshi Batra. Well, the banking sector in India is always seen as the backbone of the Indian economy. How strong is the real economy really gets reflected in our banking system. The Indian banking industry today actually seems to be in a far better position than earlier. Remember that there was a time not so long ago when the sector really battled with the asset quality issues. There was the bad loans problem, capital adequacy, weak balance sheets, and much more. To now, when major PSU banks have posted record profits in the Q2 of financial year 2023. Many stocks are also trading near their all-time highs from this sector. Most of India's top private and public sector banks are actually seeing robust lending growth as well to retail and to housing, and that's post the pandemic, leading to revised earnings growth. And so there's clearly the big banking turnaround that we are witnessing. Now, whether this will continue in 2023 is what we will seek to address in this show. Joining in with me are two very special guests. On the show, I have Mr. Anand Adhikari, Managing Editor of Business Today magazine, and we are also joined by Mr. Hemindra Hazari, independent analyst and an expert on banking. Welcome to both of you, and thank you so much for taking the time out for this very important discussion. Mr. Hazari, let me start off with you. Now, banking as a theme clearly is emerging as a consensus bet of almost all the analysts and experts that I'm speaking with almost on a daily basis. Most of them believe that banking will definitely take the lead when it comes to stock market performance in 2023. Help us understand, and our viewers as well, what is really behind this kind of a bullishness?
What has happened after many years of bad debt provisioning because of very large NPAs, mainly coming from the corporate sector, you have seen bad debt provisions drastically decline in this year. And that has been a critical driver of overall bank profits, especially of the government banks. It has also coincided with a rising interest rate regime. And in a rising interest rate regime, you will find in the initial stages, the net interest margin or the interest spread of banks, they expand. And with time, if other things remain constant, then the rising deposit costs catch up. But we are still in that initial stage where you are in a rising interest rate, where all the loans are getting repriced while deposits are getting repriced with a lag. This leads to an increase in the interest margin or the interest spread, and that is a very critical driver for profits. The third driver, what we see is happening is that after say 2019, we are seeing double-digit percentage growth in overall bank credit. Now we have seen single digit for the last 3 years, and suddenly you have seen a revival in overall credit, and in particular in credit to industry. So these are the three factors which are really driving the bank profits, and especially the government banks' profits. And that is why you have seen a surge in profits and a surge also in stock prices in the market. And this is, mind you, in great contradiction to how the other sectors are doing.
Yes.
So therefore, there is far more attention now being focused on bank stocks.
Absolutely right. Anand, let me bring you in here. For the benefit of all our audiences, could you also detail what has really led to this improved performance in the banks, especially when we talk about the PSU banks too? Anand, I think you're on mute.
Yes, sorry. Sakshi, I'll go back to 2014-15 period. When the gross NPAs were around 4%, and the entire banking industry that time posted a profit of some 89,000 crore. Now, in the last 6-7 years, if you see, the banking sector has gone through a lot. It all started with when former Governor Rajan started the AQR, that asset quality review, and that resulted in huge provisioning pressure. I think the AQR came in December 2015. And then in the next year, if you see, 2016, the IBC came. And in the last 4-5 years, if you see, almost 8 lakh crore of worth of loans were admitted under the IBC. Right. And again, the huge provisioning pressure. And then we saw the demon, GST which impacted the MSME, also impacted the self-employed. And then the ILFS and tightening, the liquidity tightening happened, and it impacted the NBFC sector because banks also lent to NBFC. So MSME, self-employed, NBFC, the entire sector was impacted. And I was just looking at the data, and then if you see, in March 2018, the entire, from 18,000 crore profit, now 18, 19, the entire banking industry posted losses. 32,000 crore losses in 18, and in March 19 it was 23,000 crore. Okay, I think things started improving in the period of 20. I think when the industry posted some 10,000 crore profit. 21 it was like 1.21 lakh crore, and 22 it was 1.81 lakh crore. So the entire industry in the last 3 years is back to profitability. And now going forward, I see the runway is clear. The credit growth is happening. Banks in a way they have cleaned up their balance sheet. Okay, so I see the growth happening now. Maybe in the near future, if I say let's say 2 to 3 year period.
Right, absolutely. Thank you for setting that context for all our viewers. Mr. Hazari, let me come back to you. The major pain point that we've all seen over the last 1 decade for especially PSU banks has been the non-performing assets. And now they are down to about 7-year low. Would it be really fair to say that the NPA issue, which was the major pain point for PSBs, is now a matter of the past?
Most definitely, because the large, lumpy corporate exposures have now all been practically written off, all at the public's expense. So, a large part of that problem is over for the time being. And this is what normally happens in business cycles. That in a boom time, it was the Indian banks and particularly the government banks which financed all these private sector infrastructure projects, and the Indian economy and the stock market boomed. But in the post-Lehman period, and particularly after the government, started doing fiscal consolidation, you have seen, the industrial stagnation, and which has been, compounded by demonetization, GST. So finally, all those things of the past seem to be over. However, I would be a little cautious about the future because we are in a very strange situation where the macro economy, in my opinion, is doing rather poorly.
Okay.
But for the present moment, bank profits are doing extremely well. Now, the issue is whether the bank profits doing well is a lead indicator that the economy is going to revive, or is it that the bank profits may not be sustainable and it may
Okay.
follow the of the others? Now, that is the issue which needs to be probably discussed.
That's absolutely true, and we will dwell on that as we further move into the discussion as well. But Anand, let me take it from the point that you left off at. We do know that big qualitative changes have been made in the banking sector. A few of them you also mentioned yourself as well. But both by the government and the regulator, could you highlight 3, 4 landmark changes, some key measures that were brought about that actually led to a turning point in this entire decade of underperformance for the sector?
So clearly, NPA is one. I talked about the AQR and the IBC. Let's look at the consolidation part. We have seen, consolidation happening in the public sector space. So today we have, 6 or 7 large public sector banks, with 10 lakh crore plus balance sheet size. We have now seen some rebalancing happening in the sense that, when I talk to SDFC, ICICI, or even SBI and other, banks, everybody is focusing now on higher rated corporate. There's a lot more focus on the retail side now. We have seen some governance reforms already in the sense that, splitting the post of, chairman and, MD in some of the bank I was looking at. Let's look at, Bank of Baroda, where we have, Hasmukh Adhya as a, the former finance secretary as a chairman. Similarly, I was looking at Canara Bank, where we have, ex-startup professional as non-executive chairman. And we also had, 13, 14, 15 period, we saw this bank board bureau where now, all CEOs and directors are appointed by an independent bureau, So I'm sure, going forward, I think, we'll see a lot of digitization gains, SBI, is a big hit, they're getting a lot of leads, through, Bank of Baroda app, I think is very, well appreciated, in the market, and new leadership also in a way, whether I look at ICICI, Access, SDFC, even CSB or IDFC first. So even the new management or the leadership is rising. So I see these as qualitative changes that are happening, but we have to see the results.
Yeah, absolutely. Mr. Hazari, how would you really rate all of these measures that have been introduced by the government and the regulator over the last few years to really aid the recovery in the banks from these pain points? Just like how Anand pointed out about the AQR, we do know how IBC came about as well, the setting up of the bad bank, all of these measures. Your thoughts on these measures? Have they been able to achieve what they were set out for? Is there a lot needs to be done even now? Your thoughts?
See, the most critical aspect was the cleaning up of bank balance sheets, which has now largely been done. But mind you, how has it been done? It has not been done through huge recoveries from these bad loans. What we have seen and what is now emerging in the media is that the bad loans that were removed from the balance sheets were done through write-offs. That
Yes.
means it was done through the recapitalization of these government banks at public's expense. So, to say that it has been a great success, the insolvency, I would really question that because
Okay.
effectively there's been hardly any marginal cash recovery from a lot
Hmm.
of these assets. It
Hmm.
has really been done through an accounting entry of a write-off. And
Hmm.
that has to see that we have a lot of these large industrialists who have really gotten away scot-free. Nothing, they've only lost their ownership and management of a lot of these companies. Now, one can rightly say, yes, at least glad that they have been removed. So I
Yeah.
think that is a positive that these errant managements, which had a history of defaults, and while still remaining in management for subsequent restructuring,
Hmm.
that particular aspect has now, a major threat and a warning to them that if this is the way they are going to manage, they are going to be removed. So I think that is the big that has come up from these aspects of the reforms that have taken place in the banking sector. But
Hmm.
sadly, the cash recovery that one also expected from the insolvency and the bankruptcy levels, that
Hmm.
aspect has happened. So it has effectively come. The write-off has come from the public's expense.
That's true. How would you look at the recent step that was introduced to increase the tenure of the top management at the PSU banks?
See, while it is a positive, I think one has to see whether it is going to be practical, because this means that an executive director has to be, be appointed in PSU banks at, at a very young age, at a much younger age
Yeah.
than what are they currently appointed at. So
Hmm.
that will take, I think, some time because if you're going to give them longer tenure for the CMD and
Hmm.
yet keep the age bracket at around 60, I think in the case of SBI, it will be about 63
Hmm.
without lowering the age at when officials become executive directors, you may really not see the practical side of it. And mind you, for private sector banks, they can go up to the age of 70, you know. So that also has to be seen in that context. So while it is positive on paper, I
Hmm.
think practically to get it implemented may take some time.
Hmm. Hmm. Absolutely. I want to understand from you, Anand, what remain as the key challenges for the sector now, even after we've seen so many steps being taken. Some have succeeded partly, some have not succeeded to what they set out to achieve. Anything that you feel that could actually pose as a major challenge going forward?
I would say, deposit, mobilization is going to be a, big challenge for the bank, because you have new entities, like small finance banks, offering higher rate. You have IDFC in the market, you have SDFC now as a merged entity, I'm
Hmm.
sure, because they have already activated the liability engine. The merger will take some time.
Hmm.
So I see huge challenges for the banks, on the deposit side. I'm sure if a rate war kind of a thing happens, that will impact their, names. So that is one. Second, I see, many banks now talking about this MSME. Even when I see SDFC, the maximum growth, though the size is small, but the maximum growth, 20 or 30% growth is coming from MSME, and that sector historically has very high NPA. Even if I see private banks,
Yeah.
so that again, the and consumer durable and other, microfinance and all that, which every bank now,
Hmm.
is talking about. So that I see as a big challenge. And
Okay.
in addition to that, Sakshi, even in the metros and the urbans are now in a way saturated. So everybody is now moving to, smaller geography, the rural or the, the semi-urban areas, and even lending to new to credit or non-salaried class and all. So that also we have to see, as NPAs are created in good times. So
Hmm.
let's see, what happens there.
Right. Mr. Hazari, anything that you believe could derail the growth in the industry going forward?
I think the banking is a proxy to the economy in all sectors, especially in India, where banks are the major providers of funds to the economy
Hmm.
because we have a very active debt capital market. So in that context, and this is the major macro worry, is
Yeah.
that today's macroeconomic situation is extremely bleak. Industrial wages as a component of total industrial cost has been declining. Agricultural wages in real terms has been stagnant or falling. You've had in the demand for the NREGS has been, 15 million people have been applying more than the pre-COVID times, which just shows you the kind of pain in the system. And demand, which is the most critical aspect, does not seem to be reviving because your capacity utilization, as found out by the RBI survey, is only at the 72% mark. It doesn't seem to be increasing over there. So if the macro economy does not move, then I really cannot see how the banking sector can move. And I think that is where the critical aspect is. And you have a situation where global growth is going to be declining. So the global stimulus to exports is not going to happen in India. Therefore, all depends on how the government revives domestic demand. Now, what
Yeah.
we are seeing in the budget, especially which are currently undergoing, is that it is because of fiscal consolidation, the central government expenditure to GDP is expected to contract in FY23. So when the
Okay.
total expenditure is going to contract, it is going to lead to a worse situation. And
Right.
I think what we're seeing currently, that is why we are having a problem with demand. That is why we are seeing why FMCG volume sales are not doing well, why two-wheeler sales are not doing well. On the other hand, we are seeing very elitist consumption, like your premium
Yeah.
cars are doing well. So you're seeing a very classic K-shaped recovery. And unfortunately, in my view, given the base of the Indian economy,
Hmm.
that is not sustainable because the elites and the high income can only
Hmm.
do so much of consumption, then it all goes into savings.
Hmm.
So, unfortunately, where the present situation is, I really don't see the demand, really picking up because the central government is not stimulating the economy. We require
Sure.
massive fiscal expansion, which the capital markets and the governments are unwilling to do.
Sure, absolutely. It's a fair point, Anand, that Mr. Hazari has made right there. Given all of these challenges and the challenges of recession impacting the globe and therefore the impact trickling in India and the Indian economy as well. So far, whatever we've achieved in the banking sector, say credit growth at a 10-year high, the retail loan growth specifically really rising high, despite all of these concerns and despite the still rising interest rate scenario. Can we continue to see this improvement going forward?
Can you hear me, Sakshi?
Yes.
Yes, yes. So I fully agree with Mr. Hazari. The clouds of uncertainty and the global recession, and even if I look at the fiscal deficit number,
Hmm.
the current account deficit, exports are falling. I fully agree with Mr. Hazari the way if you look at the macro numbers, they are not very encouraging. But within banks, the way I look at it,
Sure.
some banks will gain and some banks will lose.
Yeah.
And I clearly see the private sector pack gaining. Whether it's ICICI, SDFC, and maybe and as we have seen in the past, public sector banks losing market share. So some banks, I'm sure, will gain and will keep on growing despite with the kind of interest rate hikes we have seen in the past.
Sure, sure, absolutely. Mr. Hazari, I'll take that point forward with you. Between private and PSU banks, where are you more bullish on? We've recently seen the PSU banks racing past the private sector in terms of a lot of parameters, corporate slippages, the credit growth, the corporate loan book as well, the stock performance as well. So now the question is, will PSU banks continue to outperform or will private banks really take the lead now?
If PSU banks have really rebounded from abysmally low levels of valuation, where nobody was willing to touch them.
Yes.
Now, because of that, they've come off such a low base. So I think there may be some steam still left in the PSUs. Because even for that matter, even HDFC Bank, had fallen out of flavor with investors, which is very extremely rare in its, over 25 years of existence. But that also we are seeing some signs of revival. But I think the merger with HDFC will take some time for it to
Okay.
consolidate with the bank. So I think there is still some steam left in the PSU banking space. However, as I said, the overall economic situation is going to
Sure.
be the determinant. And I really don't, I'm not very optimistic of that level, given what we are seeing in the macro economy. And
Right. So
unfortunately,
you don't expect a re-rating for the PSU banks or earnings upgrade for say the rest of FY23 and for 24?
see, 23 years now, we are practically 9 months are going to be over. So, yes, but I think the sustainability of the performance in 24, it will
Hmm.
all depend whether the credit growth, which we have seen grow in double digits from April, is likely to continue. This double-digit credit growth has come about, as I said, because the corporates have shifted from the debt markets and from overseas raising of funds to bank credit because it is cheaper. It is not really coming about because of fresh demand, because we are seeing the other macroeconomic indicators are rather bleak. I
Right.
really do not see investment coming up, increasing because the way the situation is, there is, the capacity utilizations are still stuck at the 72% mark. So there's not going to be any fresh demand. So it is just a shifting of, from the capital market to bank credit, from overseas market to bank credit. And I don't think that can give you a sustainable long-term performance. So that may
Hmm.
start with the new FY24 coming in.
Right. Anand, what would be, what are you really looking at in terms of pecking order? Is that really going to change when we talk about the top banks and their performance going forward from here? You talked about briefly on the new horse or the dark horse, IDFC first as well. How is that going to really play out? We've already seen in the last 1, 2 odd years how ICICI Bank has really overtaken HDFC Bank, and that's been an underperformer vis-a-vis the other one. And going forward from here, more analysts being bullish on, say, perhaps ICICI Bank having more room to go forward from here. And the way, even in PSU banks, we're seeing now a recovery in not just SBI, but you're seeing Bank of Baroda, PNB, and Federal Bank, all of them also pulling up. So, your thoughts here?
Just IDFC is one because we have done something for the magazine. If you look at the IDFC bank today, the way they have, we have seen the improvement in the ROE. Now, last year I think they made some profit of some 200, 300 crore. But first quarter some 400 crore profit, second quarter some 500 crore. I think clearly they are moving towards 10% plus ROE kind. I don't know about the re-rating part, but in terms of a stock performance last 1 year, I was looking at some data. It's a clearly outperformer, some 20% gain, where the BSE census was 5%, the bank index was around 15%. Even the business, if you see, today they are 70% retail. I mean, they want to be complete retail banks. Look at their CASA. When every other bank is struggling, they have got 50% CASA. So a 10 plus ROE, 50 plus percent plus CASA, 70% retail bank. I see IDFC as a very promising bank. Look at ICICI Bank. Ever since Sandeep Bakshi came, it has been an outperformer for the last 5 years. If you look at the data, I've seen the 1 year, 3 year, and the 5 year data. They are more retail today. Even on the corporate side earlier, they used to just sign the check, but today it's more like 360-degree. When they approach a corporate, or when they give a loan, they also get their saving account. They also do forex and other fee-based things with them. So again, ICICI is another turnaround story. SDFC, yes. I mean, as we have to see the execution. Today, there's an entirely new management there. By the time the merger will happen, Deepak Parekh will retire. KK will also be out, almost out. Renu will not be there. Aditya Puri has already left. So people want to see the execution on the SDFC side because there's a complete new team there.
Absolutely. That will be very interesting developments to really look at and keenly monitor all those developments as well. But Mr. Hazari, how would you really advise investors to now approach the entire banking space? And amid all of these developments, the mergers of the two big giants and IDFC as well following up, the changing order of how profitability is really taking some of the underperformers really at the top of the charts as well. Your thoughts on how does one really approach? Mr. Hazari, can you hear me?
Now suddenly the volume has come back. Yeah.
Okay, it's come back? Okay, great. Let me ask you the question again. So, Mr. Hazari, let me take it across to you now. How would you really advise investors to approach the banking sector and this banking space as a whole now as we move into 2023? How should really they be moving across, amidst all of this news of mergers coming about and the challenges of the macroeconomy that you yourself have pointed out? What will do better?
See, in banking, I believe that banks should not either go either too much into wholesale or corporate or too much into retail. Now, what we've seen many banks do, particularly ICICI Bank and probably even IDFC, is that because to overcome a huge corporate loan problem, they went all out into retail. In banks, you always need a balance. However good a sector or a particular area of operations may be, you always must maintain a balance because one never knows when something which looks extremely promising today may not be so promising tomorrow. And that was precisely the problem with infrastructure loans. That when they were given, everyone thought the Indian economy is going to boom and infrastructure is going to boom. I see a similar issue today, and I have seen this for the last 1 to 2 years. The way banks have gone wholeheartedly into retail. Now, when you actually do the divisional wise profitability studies, you will find that retail is not as profitable as corporate. A
Okay.
corporate is far more profitable, and therefore, banks which have gone like 60, 70% of their total loans into retail,
Hmm.
you may have issues. So I would like to see banks, withdraw from retail, and now since corporate is picking up, I think they should start balancing their overall book, and I
Right.
think those two will be better off.
Okay, understood that. So, in the end, I want your take on whether the Modi government has delivered on the banking turnaround or a lot more still needs to be done.
Is that to me?
Yes.
See, for the banks to do well, one, I would have expected huge cash recoveries from all these bad debt loans. That has not happened. There have been just huge write-offs. So the public's expense you have written off and actually handed the corporates concerned have not really returned back the cash. They've just been
Hmm.
removed from. So on that aspect, I really don't see anything very promising. The one thing which is good, as I mentioned earlier, that errant managements have been removed. So that to me is a big positive. But on the critical question of whether the economy is going to be revived or is reviving, there I believe has been an epic failure because the economy today is in the doldrums.
Correct.
Unfortunately, we do not see much media coverage about that, but at the
Hmm.
ground level, and we are seeing that in the sales of two-wheelers, in the sales of FMCG, which is a mass consumption product. If
Hmm.
they don't well, you can imagine the plight of the masses, and that's the bulk of your Indian population.
Hmm.
A considerable part is either below the poverty line or slightly above the poverty line. So
True.
unless they are not, they do not come up, you're not going to get sustainable demand in the system. You get these little pockets of elitist demand, which will lead to a small bubble, but then it will collapse. And that has been sadly the story for a very long time in the Indian economy,
Hmm.
because you require an expansion in the fiscal budget, in the fiscal deficit. Now, unfortunately, this whole philosophy of fiscal consolidation, which I do not subscribe to, which actually be a major impediment
Hmm.
for sustainable investment and sustainable demand in the future.
Right, absolutely. So, a lot of challenges right there that need to be addressed, and a whole lot more to be done, especially when we are going to be seeing a lot of challenges emerge when you talk about the slowdown in the economies worldwide as we enter 2023. The big question mark on the sustainability of growth, sustainability of profits for the banking going forward. A lot depends on how the demand will go forward from here, especially for the volume oriented sectors, just like how Mr. Hazari pointed out, the FMCG, the auto sector. If those concerns are abated, perhaps we could see a sustainable move on the upside for the banks. Well, thank you so much to both of you for sharing all these wonderful insights with all our viewers, and hope you have a great day. Thank you so much for being with us on Business Today TV.
Thank you,
Thank you.
Sakshi. Thank you.
If you like the video, do like, comment, share and subscribe.